and jump right into corporate conversation. We have on board with us Mr. Sadaf Saeed, CEO of Muthoot Microfinance. A very good morning, Mr. Saeed. Thank you so much for joining us here on 80 Now. It's a pleasure to have you on board. I just want to ask you to start off with, how much further do you see gross NPAs and credit costs falling from here on out?
See, first of all, good morning. Thank you very much for inviting me. As microfinance industry is seeing a very good turnaround in terms of disbursement as well as in terms of collections, we definitely see the credit cost rationalizing. Our credit cost has already reduced significantly from past financial year, where we were at as high as 9.4%. This year it is at 2.6%. And if you look at quarter on quarter, Q4 versus Q1 as well, it has reduced from 2.8% to 2.6%. Our guidance was around 2.7%, but we are below the guidance. Definitely, we see good improvement in asset quality. We believe that steady state it could reach around 2.25 to 2.5% in terms of credit cost. And that is the kind of cover we would like to maintain. But what we are seeing is collection efficiency is very good. Already we have reached 98% overall collection efficiency. And on the X bucket, it's 99.9%. All the loans that we have disbursed since April 2026 or April 2025 rather, all are performing really, really well. There the delinquency is less than 1%. So that is really heartening for us. And going forward with the focus on secured lending that we are doing, where almost 30% of our portfolio this financial year would be into non-JLG business, where the asset quality is much higher. We definitely anticipate the credit cost to go down further.
Okay, so credit cost is expected to go down further. That's the word coming in. But Mr. Sayeed, let's also talk about gold lending. Is that becoming the real growth engine for the company beyond traditional microfinance?
Yeah, definitely gold is adding to the options for the customer. The idea here is to ensure that the 360-degree needs of our customers are catered to. We have understood that our customer is borrowing gold, borrowing loan against property, and taking business loans for growth of their business. So these are the products that we have added to our portfolio, and we are offering this product. Idea is to increase the wallet share of the customer. And definitely, this is helping the customer to grow business, improve their income, improve their living standard. And gold is a very essential part because it gives a lot of flexibility to the customer whenever she wants to borrow. It is a product which can be closed anytime and she can leverage on her asset. So that becomes a very useful product for the customer. And being from a Muthoot brand, it becomes a product which is our core product in a sense that people trust us with this gold loan financing and storing of the gold. So that way it becomes a very good product for us. We are disbursing almost 100 crore, more than 100 crore every month on this. So this will definitely become a core part of our business in the long run.
Got that, Mr. Saeed. You've also mentioned an estimate of 11,000 crores of gold loans among your existing customers. Can you tell us what sort of recent trends or the traction that you're seeing in gold loans on ground right now? And how are you envisioning the trend to look like for the rest of the financial year as well?
See, growth of gold loans is on the rise. Definitely, customers are more aware about their asset and how they can leverage those assets and take the benefit of a loan which is available at a quick kind of a turnaround. So definitely, gold is on an uptick, both from a distribution point of view as well as from the valuation point of view, because the gold prices are going up, so customers are able to avail more loans through gold loans. I think most important aspect is that awareness among the clients, because no longer gold is something that people feel shy of pledging. Now people are more savvy and they feel that this is an asset which they must leverage. And with our distribution network of our parent company as well as our company, more than 6,500 branches across the country, we are able to provide this option to our customer at their doorstep. So this is something that really is taking off. 11,000 crore is the current outstanding, and it is ever growing. This is the fastest growing asset class among the loans that our customers have taken. And definitely, I think this momentum will continue for the balance period of the financial year.
Okay, so that's as far as gold loans are concerned, but let's also talk about your target for the full year as far as return on assets is concerned. You've guided for about 3.3% ROA this year and 4 to 4.5% within the next 18 months. Any status, if you can take us through whether the guidance remains intact and the risks that you see to be able to achieve this guidance?
So the guidance is very much intact. We are likely to outdo the guidance. The disbursements are very strong, and we are getting into the festive season. Today is Onam. I would also like to take this opportunity to wish everyone a very happy Onam. And this is the beginning of the festival season. And during this season, up till the financial year end, there is a huge offtake of loans. So definitely Q2, Q3, Q4 are much more productive. So we expect that disbursement as well as the profitability to improve. We are seeing cost of fund consistently coming down. We had reduced in the first quarter 14 basis point in terms of our cost of fund. We are likely to see this reduction further. We anticipate the whole year we will see around 30 basis point reduction in our cost of fund. The benefit of our rating upgrade is started to accrue. We are getting incremental loans are at much cheaper rate. We are just doing an NCD of around 250 crore at 9.3%. So those benefits will definitely add to our net interest margin. And ultimately, with reduction in OPEX, with the leverage with the branches and the disbursement we are doing, so the cost OPEX will also go down and your credit cost will also go down. All of this will add to the ROA. We are definitely gonna outdo the guidance in terms of 3.3% ROA, and we are on our way to build a franchise which is gonna deliver a 5% ROA in the long run.
Got that, Mr. Saeed. That's on the ROA front. Can you give us a sense of the 18-month guidance as well that you've mentioned at 4 to 4.5%? And or the 5% that you mentioned, when are you expecting to hit that? What happens to your 18-month guidance? And also some color, if you can give on the 20% growth guidance, which you've mentioned across your books. And can you see an upward revision there as well?
Yeah, definitely on the AUM growth, we will look at how the credit quality is coming around. I think right now what we are seeing is it's a huge improvement, and the overall macroeconomic situation also looks okay in terms of disbursement. Only thing to be washed out is the inflation, but otherwise the offtake of loan is pretty good and repayment is also good. So which is a conducive environment for disbursement. So we will continue to disburse more. 20% growth for this year is on track. Definitely, we will continue to grow at 20 to 21% kind of a growth rate every year, because to achieve our target of 30,000 crores by 2030, we need to have a 21% CAGR, and we are likely to maintain 20% to 25% growth every year. In terms of our ROA for the next 18 months, we are absolutely on track in terms of our growth, in terms of our product diversification, in terms of our cost structure, the way we are leveraging on the branches. Our per branch AUM is increasing almost 20%. It has already increased in the quarter one. It is likely to further increase by the end of this financial year. And overall, our credit cost is going down. Our cost of fund is reducing. We right now have 5,000 crores of sanction in our hand and around 1,300 crores of liquidity in our balance sheet. So we have enough funds available. We can negotiate well. As I told you, we are out there with an NCD. We have a couple of external commercial borrowing also in our hand, $25 million. Which we are yet to draw down, because we are just waiting for the hedging cost to rationalize a little bit. And those are also at a very effective rate. So in terms of liability side, we don't have any challenge. On the asset quality side, things are improving. Disbursement offtake is great. We are getting into the festive season. So definitely the next 18 months looks like a great period for growth and also an asset quality for microfinance.
Okay, so the growth target continues to remain intact. That's the word coming in. Mrs. Sayeed, thank you so much for taking your time out, and we look forward to interacting with you